Anyone can put on a string of winning trades, but what matters is consistency over the long term. For the past year, every trade I've taken has been live in front of hundreds of students in real time. I share my thought process, executions, and my trades, win or lose. I made $41,186 last month trading, and in today's video, I want to prove to you why that wasn't luck. I'll be going over step by step the exact trades that I took to achieve these results. I'll be talking about my thought process on the higher time frames to my executions on the lower time frames, and by the end of the video, you'll realize that every single trade that I take follows the exact same system. So right here, you can see I'm on my TradeZilla, end up ending off the month with a net P&L of 41,186 with a trade win percentage of 60%. So I end up taking 9 winners, 6 losers, profit factor of 7.45, daily win percentage of 83%. I only had 2 red days this month with an average win to loss ratio of 4.97. So my average winner was a $5,000 trade and my average loser was $1,000. What's crazy this month is that I didn't have too many losing trades. Majority of my trades were fairly spot on this month, especially coming back from vacation. We had some super solid setups coming into earnings, and I ended up executing really well this month. I ended up keeping my loser small, and I was able to capitalize on 2 trades that really made up for my whole month. So if we scroll down, so you can see I ended up only trading 3 out of the 4 weeks. I ended up not trading the second week of the whole month just due to the fact that I was on vacation. I personally don't trade when I'm on vacation, but you can see majority of my P&L was made through 2 days, right? I had an $8,000 day. This was on Apple higher time frame setup, and then this was a Tesla position. This was after earnings. I ended up making $19,000 on this day as well. So basically 2 trades equated for around $28,000, which is roughly around 2/3 if I'm doing the math correctly. Around 2/3 of my P&L was made up of 2 trades. So just the power of being able to capture your higher time frame A+ setups. All you need is just those 1 to 2 A+ setups to really make your whole month. As you can see, for the rest of the month, I really just had some solid base hits, nothing too crazy out of the ordinary. The main thing I want to focus on is those A+ higher time frame setups that I was able to make majority of my P&L. So basically in today's video, I'm going to go over some of the trades that I feel like is going to best benefit you guys to learn from. I'm going to go over my position sizing, my risk management, what was I looking for on the higher time frames, the entry models on the lower time frames, just everything that you would want to know when it comes to trading in the markets. So with that being said, let's hop into our first example. So as you can see, we're on my first example here. This is on NVIDIA. This is Thursday, October the 3rd. End up making over $5,000 on this trade. End up trading 60 contracts. And I always talk about it's not about how much money I made. It's about how much money I risked. In this case, I had around an $8,000 position size. I was risking 1.25 on the contracts, which ended up equating to around $1,300 for a realized R multiple of 4.2 risk to reward. As you can see, I ended up taking the opening range break and retest on the 1 minute time frame. That was my entry model, and then we end up scaling nicely towards the upside. If I go down and scroll into the options risk right here, you can see that in this case I was risking 1.25 on the contract. So right here I was risking a stop below underneath this one. It would have equated to around 1.2 to around 1.25. So give or take, I was risking around $1,300 to $1,500 on this trade to make around $5,000. You can see the contracts end up paying nicely. They went from $1.20 all the way up towards $3 for my final and best scales of the day. So now let's go into the charts to see exactly what I was looking for. So you can see we're on the NVIDIA 1 hour time frame, and the reason why I was looking for NVIDIA to gravitate towards the upside was because I had this key level marked out. As you can see, we have multiple touches around this key area. We have this previous resistance turn into support. You can see once we got back underneath it, we end up using this as resistance once again. So this was a key area that we're looking for NVIDIA to trade off of. So in this day, what happened is we end up gravitating higher in the pre-market, getting back above our key level. We also had a move well above our previous day highs as well. If I go into lower time frames here, you can see that price right here. You can see it broke above our previous day's high. We broke above our key level coming to pre-market as well. You can see we end up having that super nice retest of this level on the higher time frames for that continued push back towards the upside. So now if I go back onto the lower time frames here and remove this, let's see what I was looking at on the 1 minute time frame. As you can see, coming into this day, now we broke above our key level, which is our flip zone on the higher time frames. Now what I'd like to see is this area be now used as a retest for a continued push back towards the upside. So you can see playing the tape coming to market open. You can see what we form is our opening range on the 1 minute candle. So what we can do is mark this out, our opening range high. We can also mark out our opening range low, and now we can play the tape. So you can see right here what we have is a retest of our opening range candle. The next candle is showing that buyers are stepping in. For me, this is enough to get in. If you watch my last video, I talked about this being a little bit more of a conservative entry model. This was based off of the higher time frames as well, where we had clear higher time frame setup, entry model on the lower time frames, opening range break on the 1 minute time frame. So that's where I get in with a stop just a break below. And in this case, where am I looking to target? If I go back onto the higher time frames here, you can see I'm looking to target this swing high, which I can mark out. This is my first profit target, and then my second profit target is going to be back towards this previous high all the way back here, which is all the way at 124. So now I can go on to the 1 minute time frame, and I can drag this out and move this all the way up towards your 124. So now we can play out the tape. You can see price had a very nice reaction off of our 1 minute opening range candle once again. I look to scale up into these areas towards your 122, and I'm leaving my rest of my trailers all the way up to basically 123, like 123.50, and all the way towards your 124. And you can see right there, price had a very nice push up all the way towards our key area, which was our 124. You can see we also end up using these down close candles. Once we broke above, we end up retesting the order block, right? Broke above again, retested this order block once again as well to a straight nice move all the way up towards that 124 key area on the higher time frames. So this ended up being a super solid trade. I ended up making $5,000 on this one, only risking around $1,300 for the day. So now let's go on to the next example that I have for us. So the next trade example that I have for us is on NVIDIA once again. This was a few weeks later. This was on Monday, October the 14th. Ended up making $2,300 on this day. Traded with 40 contracts, a little bit of a lower position size on this one. Ended up trading a $6,000 position size, only a 30% gain on this one. I was risking around 1.5 on the contracts, which ended up being around $800 for an R multiple of 2.95. In this case, the setup that I was looking for was based off of the 84% rule reclaim for that nice push towards the upside. If you scroll down here and look at how the contracts moves as well, I ended up getting the contracts off this key area, which was your reclaim, risk underneath, which is your 1.5, and I was looking for that nice push towards the upside, which we ended up getting, which was super solid. Now let's go on to the charts. So you can see we're back on the trading view chart, and you can see NVIDIA is clearly in an uptrend, right? We're clearly in an uptrend, consistently making higher highs, higher lows, right? Higher highs, higher lows. We have a clear push towards the upside, being that all-time highs level. So if I zoom out just a little bit right here, you can see that we're fairly close to this all-time highs. We're above our swing high being our 136. So our next logical level is going to be this all-time highs level. So coming into this day on NVIDIA, what I was looking for was a hold above our 136, and a hold above that level was really going to launch price all the way towards 140, which is that higher time frame all-time highs level. So now we can go on to the lower time frames to see exactly what I was looking for. So you can see we're on the NVIDIA 5-minute time frame here, and you can see we're well above our previous day highs. So coming into market open, we have a nice push towards the upside. We're above our previous day highs. We're gapping up coming to market open, and we have a clear shot towards that all-time highs level. So based off the first 5-minute candle, you can see price has a very strong push towards the upside. So what we can expect is a continuation towards really that all-time highs level. So now we can go on to the 1-minute time frame. You can see that price, right? As I mentioned, big push towards the upside. I personally was not able to capture this move higher. So if I'm not able to capture this move right off the bat, I'm going to be looking for pullbacks. So in this case, what I have marked out is a 1-minute order block. So I have a 1-minute order block marked out. What I like to see kind of is a break above, right? Retest of this level and a continuation back towards the highs. So you can see here as I play out the tape, price does get that break above, but what we have is not too much displacement, right? We do break above this level and we're coming back to retest this right here, but we don't have any displacement. So if I am looking for a retest, what I like to look for is displacement, especially on a push like this on a 1-minute order block. I want to see some displacement where price is going to expand higher, retest, and then push back towards the upside. Whenever I don't have displacement, I look to be a little bit more patient, and I'm not going to look to be as aggressive. So right here, you can see that price was holding this 1 minute order block, but never really showed any strong signs of buyers that price was going to hold this level. You can see we do have quite a few wicks here, but we just never end up having that continuation back towards the upside. So now what I'll either be looking for on NVIDIA is the retest of our opening range on the 1 minute candle, potential retest of this level, or we're going to be looking for the reclaim of your 1 minute order block, an 84% rule for a move back towards the highs. So you can see that price is now trying to reclaim this 1 minute order block. You can see we actually end up having that candle closure above this level right here. So once we have that candle closure back above our key area, that's where you can look to get in for a move back towards the upside. In this case, I was looking for that retest. I end up getting that retest right here. That's where I get in with a stop just to break below. And in this case, I'm looking to target my higher time frame levels, being that 139.50 and really that like 140 on the higher time frame. So I had a couple partials here. The main thing was I was looking for those higher time frame objectives. A lot of times people ask me as well if I'm going to look to take some off at high day. I personally rarely take some off at high day if I'm looking at the 84% rule. If I'm trading the 84% rule, 84% of the time it works off. So I'm going to look to scale above high day, and I'm going to be looking for continuations towards the upside as well. So you can see right there, price ended up having a nice push towards the upside. I was scaling along the ways. I ended up stopping the rest of my contracts once it broke underneath this key swing low. Ended up being a super solid trade. I was looking for a higher time frame objective, being that all-time highs. Never quite got there, but I don't need to hit all profit targets to make money. So now let's go on to the third example that I have for us today. My third example that I have for us today is on Apple, Tuesday, August the 15th. This was an all-time highs play. Beautiful setup for a move towards the upside. I ended up trading 60 contracts on this day. $8,000 position size. As I always talk about, it's not how much money I made, it's how much I risked. In this case, I was risking 1.1 on the contracts for around $2,000 risk for a 4.31 risk to reward ratio. Ended up being a super solid trade, A+ setup. Gap and go, opening drive play, opening range break and retest on the 1 minute time frame. If you look at the contracts, they end up absolutely going insane. As you can see right there, price ended up going from 150 all the way towards 350 towards the upside. So absolutely beautiful trade on Apple, and I'm going to show you guys exactly what I was looking for on the charts. So you can see right here, we're on the Apple 1 hour time frame. And why was I so bullish on this name? First of all, you can see we're creating higher highs, higher lows. We're having a nice push towards the upside. We have clear levels being that all-time highs being that 237. If I zoom out just a little bit here, what we have is a triple top. You can see we have a triple top, which is built up liquidity. We have built up liquidity above these highs. So if we can get above this key area, we have clear shots towards that all-time highs level, being that 237, as you can see right here. So with that being said, right, we can now go on to the lower time frames. You can see on the 15-minute time frame, coming to market open, we're above our previous day highs. You can see big push coming to pre-market. We're using this area as essentially a retest for that move back towards where that all-time highs level being that 237. So now I can go back, click on the replay mode, and go on to the lower time frames. So coming into market open, we know that we're bullish on the higher time frames. So what are we going to be looking for? Any sort of bullish setup for a move higher. So you can see right here, what we form is our 1 minute opening range. You can see price. We have our 1 minute opening range. We can mark out now the high and low of the first 1 minute candle. And now we can use this as a potential move towards the upside, right? You can either buy the break of the opening range candle, or you can look for the retest. Either way, they're the exact same entry, and we're looking for the exact same targets as well, being that all-time highs level. So now we can speed this up. You can see that price ended up retesting off this area, basically an immediate retest. As I mentioned, the reason why we're able to take this trade towards the upside is based off the higher time frame thesis, right? You're not going to be regularly looking for just any sort of opening range break, right? If you can build a thesis around it, you have clear higher time frame objectives. There's relative strength. There's a bunch of other confluences. We have a good shot that we're going to end up moving towards the upside, being that 237. And as we play out the tape, you can see price end up having a super solid push all the way towards that all-time highs level, being that 237. That's where I took off really 90% of my contracts. End up leaving a little bit of contracts just in case I wanted to go higher, but I took off majority of my position. Ended up being a super solid A+ trade towards the upside based off that higher time frame thesis. I've talked about this trade setup plenty of times, so if you guys want to go back, check out the full live session as well. It's on my YouTube channel. So now let's go on to the fourth trade that I have for us today. So as you can see, we're on my fourth trading, and I ended up trading futures contracts right here. This was a gap fill, 5-minute opening range break and retest towards the downside on the ES. Ended up making $2,400 on this one, traded 5 contracts. Risk was around $1,000. So this one was around a 2 risk to reward ratio. So this ended up being a most conservative entry model for a continued push down towards that higher time frame gap level that I'm going to be showing you guys. So now we can go on to the trading view charts. So what was I looking at coming into this day? So you can see we're on the 5-minute time frame here, and this was what's called our all-time highs level. So this was our all-time highs level on the ES. Price ended up gapping above. So whenever price has a big gap up like this and we're coming right in towards a key level, the first 5 minutes is going to be super telling. So you can see within the first 5 minutes we have a pretty big rejection off of our all-time highs level. So in this case, what we're going to be doing is looking for really a move back down towards our gap fill, which was our previous day highs as well. So you can see price ends up breaking underneath this key high, comes back, retests this area, and now we're going to be looking for that continued push down towards our previous day high and our gap fill on the higher time frame. So if I go into the 1-minute chart here, you can see that price end up having a nice retest off of our 5-minute opening range, right? This is a little bit more of an aggressive entry. You can see right here on this candle. What I was waiting for was a little bit more conservative. So once this candle was forming, I knew that I was bearish. I can risk off this swing high. So as this candle was forming, I got in here, risk off this swing high, and I'm now looking for continuations down towards your low of day, your previous high of day, and your gap fill towards the downside. So if we play out the tape, you can see that price ended up tapping into our previous high of day. That's where I look to take some off. And now I'm looking for my main target, which is your previous day's gap fill. And you play out the tape here. And I end up getting stopped out the rest of my contract. So price ended up breaking back above my key level that I wanted to see it hold, which is this level right here. End up stopping the rest of my contracts out in profit. End up being still a super solid scalp towards the downside. Never quite hit my full profit target in the time that I wanted to. It ended up filling the gap a little bit later, but I was only looking for that quick gap fill towards the downside. So now let's go on to the next example that I have. So you can see we're on my 5th example. This was on Tesla, October the 25th. I talked about this example quite a few times now, but ended up being a super solid trade. I want to talk about it once again. Ended up making close to $20,000 on this trade. Ended up having a $14,000 position size, 60 contracts in this one. Ended up risking around $3,000 for a R multiple of 6.65. This ended up being an A+ setup towards the upside. If you actually look at the contracts, at one point I was down a decent amount unrealized. So if you kind of scroll back, see how the contracts were moving. Price at one point, if you go into the 1-minute time frame here, I ended up being unrealized a decent amount. I had to average around 250 on the contracts. I was down around 50 cents per contract. And on top of this, this was actually an 84% roll. So I took a loss on the first one, down $1,500. I was also down at one point almost $3,000. So at one point on the day, I was down $4,000, and then I ended up making over $20,000 by the next day. So just to show you guys, right, to make money, right, you have to be able to hold and weather some drawdown. Most of my trades I like to see kind of work out right off the bat, but in this case, right, A+ setup, higher time frames is based off the 5-minute. Sometimes you have to give it a little bit of room. So in this case, I was down a decent amount. It still held my key levels. I trusted them, and I didn't look at my P&L, and then I was able to make that $20,000 that I'm going to be showing you guys. So Tesla, as you can see right here, clear push towards the upside due to earnings. We're above our key level as well, which is our 245. So we're very much bullish. Bullish earnings, bullish higher time frames. We're above our key levels. We're going to be looking for continuations towards the upside. So you can see on the 5-minute time frame, price end up having a big push right off the bat. We can mark out our 5-minute opening range candle. Price end up having a nice retest off this level. But now let's go on to the 1-minute time frame. So now you can see we're on the 1-minute time frame. Price right off the gates had a nice opening range break towards the upside. I was able to capture this right off the bat. So what I was looking for, as I was talking about, is pullbacks. So I marked out this 1-minute order block and I dragged this over. As you can see right here, price ended up having a nice retest off this level. That's where I got in my first entry. I got in my first entry off this level, stopped just to break below, and I was looking for the higher time frame targets. As always, as I talk about, I'm not really looking to scale at high day if price is fairly close. Contracts end up having a nice push right off the bat. I never end up selling here because I was in a starter position. So price ended up pulling all the way back down. As you can see here, we're trying to hold this 1-minute order block nicely. I ended up getting stopped out at the low, which was a little bit unfortunate. but you can see price reclaimed our key area. So right here, you can see I ended up getting stopped out right on this candle, but price ended up reclaiming our key area, showing strength off our 5-minute opening range. So I knew that I was wrong on the first setup, and I'm going to look to take the second setup, which is the 84% rule based off the 5-minute opening range with the exact same thesis, with the exact same targets, with the exact same stops. It's just I'm going to try this once again because I know on the first time, if it doesn't work out, I can hit the 84% rule if the same conditions apply. And in this case, the same conditions apply, and I'm going to be looking for the exact same setup back towards the upside. So once price had a candle closure, that's when I got in with a stop just to break below, and now I'm in my full position looking for continuations towards the upside. Now we can play out the tape. So once price really got above this key pivot level intraday, which is our 251, we end up having a nice retest off this level, super solid push towards the upside. And of course, you guys know what happened next. We end up absolutely launching towards the upside. I was scaling along the ways, but I held some contracts that absolutely paid towards the upside. I should have honestly made more money on this day. My executions weren't perfect, but the higher time frame thesis was solid, and that's how I was able to make that amount of money on Tesla. So now let's go on to the next example that I have for us today. So now we're on my final example that I have. This was the last day of the month, AMD, October the 31st. Ended up making $3,700 on AMD, traded 40 contracts. $6,000 position size. I always talk about it's not about how much I made, it's how much I risked. I was only risking $800 on this one, 1.3 stop on the contracts for an R multiple of 4.27. You can see this end up being a super solid, basically off your opening range break and retest off the 1 minute time frame. That's not quite what my entry was. I got off of the 1 minute order block for a continued push down towards the downside. This is basically a day 2 continuation earnings play. And if I scroll down here, you can see on the contract, very minimal at a super solid entry, right? Got in as soon as this candle closed, stopped just underneath, looking for that push towards the upside. End up only risking 1.3 on the contracts, and that's how I was able to have such a nice solid trade on AMD. Now let's go on to the trading view chart. As you can see, we're on the 15-minute time frame, and the reason I was able to capture this trade towards the downside on AMD is because we're in a clear downtrend. We're making lower highs, lower lows, lower highs, lower lows, right? We're continuing towards the downside. This is basically day 2 continuation. We also had earnings, right? Day 1 push towards the downside. We're looking for a day 2 continuation. We had a nice reject off of your previous day's low, and then we also had a nice 1 minute opening range break and retest for more continuations towards the downside. So now we can go into lower time frames. So you can see right off the bat, price is rejecting off of your previous day's low. We end up having a nice push towards the downside. Price, you can see right here as well, retested off your opening range candle for more continuation towards the downside. Now what I'm going to have marked out really is this 1 minute order block. So I'm going to have this 1 minute order blocked out, and I'm going to play out the tape. You can see as well, price didn't have too much displacement, as I talk about. Or if price doesn't have too much displacement, what am I going to wait for? I'm going to wait for a conservative entry. So I'm not going to look to blindly buy right off the bat, right? I'm going to wait for weak price action where price potentially has a confirmation candle, shows that price wants to head lower, and then I'm going to look to short it towards the downside after it shows weak price action inside of this 1 minute order block. So you can see as I play out the tape, this right here is enough for me to get in. So you can see right here, price pops towards the upside into towards this 1 minute order block, has a nice green candle closure, but then instantly right at that next candle has a weak candle closure at the exact same time as well. QQQ was showing weakness. So I had a stop just a break above, and now I'm looking for what? Continuations to where, right? Low of day and below. In this case, as I mentioned, I'm not looking to scale low of day because price is just right here, right? The reason, the thesis behind not scaling low of days as well is because if price breaks underneath low of day, there's a very good chance that we continue lower just based off the higher time frames and what price wants to do. Price reverses at low of day, I wouldn't be opposed to getting stopped out because it would be a very minimal loss. But if it can break underneath low of day, there's a very good chance price has continuation. So I'm on the 1 hour time frame, and now I can go look left to look at targets. In this case, the key levels that I have marked out was just these key lows all the way back from here. So I marked out this level, 145. I marked out this key low, which is 143.7. And I also had this low marked out down, which is all the way down towards our 140.70. So now I can go onto the lower time frames and use these as potential targets, and I could drag this all the way towards the downside. Now play out the tape. And you can see, as I mentioned, once price gives up low of day, there's a good chance we have more continuation towards the downside. I look to take some off as we push towards the downside, leaving some for my final trailers being that 143.72. And see price end up tapping my key level. I also had some more targets towards the downside as well. End up getting stopped out the rest of my position, but end up being a super solid trade on AMD to end off one fairly crazy month that I had personally. So I hope you guys enjoyed that video. If you did, I appreciate if you guys drop me a like and sub, and I'll see you guys next week for a brand new video. Peace.